Afternoon. Happy Thursday. We have charitable giving as a prime topic here this week, as well as a real focus on jobs and inflation for kind of our highlights in this week's market update. My name is Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. Before we get into the news, the data, the trends, I just want to tease a little bit what's to come in our amazing question of the week, which actually is maybe a little bit more of a trending question than from anybody in particular, definitely on a lot of people's mind at this time, which is about charitable giving and ways to really do it to help manage taxation and make a larger impact. Before we get to that, obviously, there's a lot to cover this past week or so as well in the markets. So the first thing I want to touch on is going all the way back to last Friday. You might remember we had talked about Jobs Week last week with the ADP employment report. And then Thursday, obviously with initial jobless claims and job openings. But Friday was the big number. So Friday, we had non-farm payrolls come out. And it showed that we added 336,000 jobs for the month of September. This was a huge number, much higher than expected, and definitely a tick up from last month or the month prior, or really for quite some time. So this was really quite the surprise, with this, especially with the Fed being really back in focus. What are they going to do next meeting? Are they going to hike? This really led to, some thoughts around the Fed potentially continuing down that path. Although that's what they had shared, obviously we get this period in between meetings where there's all this back and forth. What will they do next meeting? This payrolls number, this non-farm payrolls number really kind of put some fuel to the fire. Let's put it that way. On top of that, inflation is still running very hot as well. So yesterday on Wednesday, we had PPI data come out. That's Producer Price Index. And PPI was up 0.5%. Core was up 0.2%. Year over year, that puts us at 2.2 on the headline number and 2.8 on the core number. This was much higher than expected. It's slightly down from last month because we had a really hot month for August. But nonetheless, it was higher than expected, and certainly shows that inflation is still here. And markets kind of brushed it off, honestly, yesterday. However, fast forward to today, we get CPI data, Consumer Price Index. And CPI was up 0.4%, so slightly down from last month. But again, August was running really hot. And then core was up 0.3%. So, it's really interesting to see this year over year. The headline number, which again is just basically taking out food and energy, was up 3.7%. And core still year over year running at 4.1%. Very far cry from the 2% that the Fed is targeting, right? So again, you've heard us talk about this idea of inflation coming down to some degree. This is really what we meant, is not running at 8% forever. But I do think that this this degree of inflation, this 3, 4, whatever it might be, is going to be a little stickier than a lot of people do think. And the Fed likely will have to do something by the end of the year here, especially if these numbers persist and the jobs continue to show strong data. So very important data points here on those three. Again, payrolls, PPI, CPI were very important this last week. Before we get to our question of the week, coming up next week, we've got a lot of housing and sales data, so be sure to tune in next Thursday. But before we break, we have a really good question of the week, which again is a little bit more of a hot topic than from anybody in particular. So hopefully this is helpful to everybody. But the question of the week is really about charitable giving. From last year, some of this data just came out, but charitable giving was up something over 20% from the year prior. So a really strong year in charitable giving. And as we get closer to Thanksgiving, as we get closer to year end, of course, charitable giving becomes a hot topic again. So what I want to really share is summarize 5 kind of key ways to consider charitable giving if you are charitably inclined, that might help you a little bit from a tax perspective and potentially leave a little bit bigger impact to the charities that are most important to you. The first one I want to touch on is a strategy called Qualified Charitable Distributions, or QCDs. So for those who are over age 70 or 72 or 74, depending on where you fall in the legislation lately, you might be familiar with a term called RMDs, or Required Minimum Distributions. Basically, the IRS makes you start taking money out of 401ks and IRAs once you hit a certain age, and it's all taxable. What a QCD would allow you to do is to directly channel those distributions to a charity. And basically, rather than looking at deductions at the end of the year, it actually comes off the top line number. It never hits your income. So whether you itemize or take the standard deduction, it doesn't really matter. This can help you from a tax perspective year over year. So, I have some clients that were contributing cash, for instance, to a charity. And instead of contributing cash, we started contributing from the QCD directly, helped them out a lot from a tax perspective. There's also charity-led trust and charitable remainder trust. This is an important area to kind of look at as well. If you are looking at something a little more complex, trust can be a great way to go. Basically, this dictates when the money is received by the charity. So a charitable-led trust means that the charity receives the income from the trust until your passing, and then the benefit would go to a beneficiary. A charitable remainder trust is the opposite. It means a beneficiary receives income from the trust while you're alive, and then at your passing, the charity ultimately receives any remaining funds at that time. The third strategy is gifting appreciated assets. This may sound really simple, but it's really important. Rather than gifting cash, you may want to explore gifting appreciated assets in some situations. This may help you to avoid capital gains taxes, especially if you have a holding with significant gains in it, but also still receiving all the benefits of the charitable contribution on the total value at that time. Fourth is this idea of bunching gifts. So another example, I had a client who was gifting every year, but in smaller increments. They were gifting a pretty small amount. Well, I shouldn't say small amount. They were gifting annually and spreading out those gifts over time. What we did is instead we looked at, hey, let's just truncate this. And instead of gifting, this amount over 10 years, let's give it in 1 year. And so basically what this allows you to do for this particular client, they were receiving the standard deduction every year. And instead of receiving the standard deduction every year and not really receiving much tax benefit from the gifts, by shortening it up, in this example, it allowed them to itemize and obviously led to a much bigger tax savings. The fifth is really important as well. It's called donor advised funds. And this is maybe one of the more flexible of these options here. But basically what this allows you to do is you can donate cash or stock, depending on what makes the most sense for you. But it is deductible in the year you donate it to this donor advised fund. It grows, it's invested, and it's tax-free as it grows. And the benefit is that you actually get to distribute the balance or a portion of the balance when you are ready. So it doesn't go directly to a charity. It goes actually into what's called a donor advised fund or a DAF, and basically grows until you're ready, and then you can distribute it as you feel is best. The best part about this is you don't have to choose the charity directly the day you contribute. So this is really helpful, I think, for those who know that they are charitable inclined, but aren't quite sure where they want to donate or how much to donate to, the charities that are most important to them. This gives you a lot of flexibility in the future. But what is very important to know is that these contributions are irrevocable to donor advised funds specifically. Okay. So I hope that's helpful. Again, QCDs, CLTs or CRTs, charitable led and charitable remainder trusts, gifting appreciated assets, the idea of bunching gifts, and then donor advised funds, and a lot of acronyms. Thanks as always for tuning in. Be sure to check in with us next Thursday, where we'll be talking housing and sales data. And of course, let us know if you have any questions as well. We'll be happy to cover them in our weekly updates. Have a great upcoming weekend. We'll see you next Thursday at 3.